Compass Global Markets Weekly Update. I'm Tony Boyajian. We'll kick off with the US dollar and particularly about the US economy. Both the US House and Senate seem to be in favour of tax reforms and perhaps having Congress pass those tax cuts by the end of this year. Now the market's been optimistic about that, and so the US dollar has strengthened. Now what we've seen in the meantime is some favourable US data, strong GDP. Employment is still quite strong because the unemployment rate in the US is at 17-year lows at 4.1%. Now elsewhere we saw President Donald Trump make his selection in terms of the new Fed chair. It's Jerome Powell, who, as we predicted, a dovish Republican, will replace Janet Yellen at the beginning of next year in February, when her tenure ends as the Fed chair. Now, Jerome Powell is a non-economist. He's a lawyer. He's been selected by Donald Trump to create this seemingly smooth passage of monetary policy in the US. In other words, very similar policy preferences to what Janet Yellen had, this gradualisation of interest rates and a moderation of economic conditions. And that should see the US dollar remain sidelined, and it should see the stock market continue to strengthen, which is one of Mr. Trump's promises. Now, it's a neutral move in terms of having Jerome Powell there, but elsewhere we need to focus on what's happening here locally. It's the first Tuesday in November. It's not only the race that stops the nation with the Melbourne Cup, it's also Reserve Bank interest rate decision day this afternoon. We expect the Reserve Bank to remain sidelined, no changes in interest rates, even though they have moved on interest rates on Melbourne Cup Day between 2006 and 2011 exclusively. But look, with inflation quite subdued at 1.8% per annum, the Reserve Bank is not going to be touching interest rates for the foreseeable future. That's seen the Australian dollar remain weak. I mean, the Australian dollar has fallen by 6% over the past 2 months. Overnight, it actually strengthened by 0.5% on the back of a weaker US dollar. But we've also seen iron ore prices strengthen by almost 6% overnight. Iron ore was trading around $59 a tonne. It's now back up towards $63 a tonne. And iron ore, being Australia's largest export earner, is certainly a really good reckoner for the Aussie dollar going forward. Now, in Australia, wages growth remain elusive. We've got this stagnant wages pattern, which is at the slowest pace on record. On top of that, we've got mortgage stress in the household sector. Rate cuts also seem quite remote now from the Reserve Bank's angle. Consumers are reluctant to spend, and this is certainly downplaying the Australian dollar and the Reserve Bank's hand when it comes to interest rates. Now, there's been a little bit of political uncertainty, if you like, with senators and members of the House being disqualified or potentially being disqualified for double citizenship, dual citizenship status. This is going to see the Turnbull government lose its majority in Parliament, so we could see the Australian dollar remain on the back foot. Look for that 75.5 to 77.5 US cent range to prevail for the rest of this week. Now, we mentioned before about what's happening in Europe. The ECB, the European Central Bank, has kept interest rates unchanged. They will taper their quantitative easing program, which means they will be buying only half the amount of bonds they used to buy, beginning from January next year until September 2018. Now we've seen the euro come off against the dollar, and that's primarily because of this uncertainty in Spanish political circles with what's happening in the Catalan region, with the Catalan independence vote now slated for the 21st of December. Last but not least, we saw the Bank of England raise interest rates by 0.25% last week. It was the first rate hike in a decade. All they really were doing was unwinding the emergency cut of 0.25% that they implemented when the June Brexit referendum took place. Inflation is quite high. It's at 5-year highs in the UK, and the CPI level remains above 3%, and GDP growth is also quite strong. So while Brexit uncertainty is still ahead of us, we've seen an increase in the Bank of England's interest rates by 0.25%. Thanks for watching. Don't forget to watch us on Thursday lunchtimes at 12:15 on Sky Business News for all the latest financial markets wrap. Have a great week.